Hello traders, and welcome back to another video. Today we are going to be discussing the best macro power of 3 setups from this past trading week. These setups are really where you want to put your focus on and master what we're going to discuss. There was actually a lot of good setups this week, especially given that it was a short week with the bank holiday this past Tuesday. So again, you really want to focus on these setups. Make sure to stick around until the end. The best setup was actually on Friday, and that'll be towards the end of the video. So be sure to stick around for that. And without further ado, let's get right into it. So number one, we are at Monday, the 1:50 p.m. macro, November 10th. Okay, so this setup here is literally textbook A+. This is exactly what you want to look for with continuation model for macro power of 3, okay? If you do nothing else besides what you see on the chart here, you are in a really, really good place. So let's break this down, and plain and simple, we had, outside of what you see on this chart on the screen right now, we had a good bullish trend, before this. And whenever we see that bullish trend, if we can identify why we should expect a continuation, that is the best case. Okay. Now, of course, there'll be times where we look for reversal model, but when we have a continuation model in play, it's super, super simple. So we've established a bullish trend. Now, why do we come into this specific macro window with the expectation of, okay, we should look for a continuation model to buy side instead of a reversal model to sell side? You know, if you look at this macro, maybe some traders look at this inversion, if you're following my cursor here, and say, okay, liquidity sweep, close below, inversion down, or even this one here, additionally, time to go and run this low and beyond to whatever sell side objectives we had. Why is that less likely than the continuation to buy side? Okay, well, look at the dealing range high. That's, of course, in line with the bullish delivery, and it's just short of what? Another session high. So this is that 1-2 punch that I always tell you guys to look for. If you have a bullish trend and this high is formed just short of another buy side objective, in this case a session high, it's very, very likely that we're going to get this continuation model and just in general deliver to these buy side objectives, especially when we look at the low of the dealing range and we have a clean sweep of these relative equal lows to build the argument for this dealing range low being protected. Okay, so if we come into this macro with that understanding, not only in what's more likely to happen, but what we want to look for as a trader with the macro power of 3 model, we want to see price continue below macro open. Now, this is running this internal sell side here, this low, this low, this low additionally, ultimately this low as well. So it's meeting that aspect of the checklist, clear drawn liquidity. We have that, sweeps below macro open, okay, and it's returning to a discount. So if we see this retracement to a discount and this is a protected low, then that retracement is just that, a retracement. And all we have to wait for is the reversal confirmation. Okay, and that's a close above this SIBI becomes a high probability inversion fair value gap. Now, why is that high probability? There's 2 reasons. One is on the chart. It's after this macro SMT, which is such a powerful signature. But if you were to drag out these 2 consecutive BISIs, I did not include them on this visual to keep it clean. But these 2 consecutive BISIs are your 130 first presentation fair value gap for the New York PM session. So you can see, if you kind of just eyeball this, and you guys should go into your own charts and look at all these examples as well so you see them. And you'll see that price comes down and is respecting on a closing basis, because the bodies tell the story, that 130 fair value gap. So, you know, the way you internalize this is, oh, okay, prices are retracing to a discount. We're seeing price respect that very important discount PD array, the 130 fair value gap. And then your close above the inversion is your final confirmation that bearish order flow is breaking down from this leg. And that signals, you know, was just a retracement. And now we're more likely to continue to buy side as we see here. Okay, so very, very good setup to start the week. 1:50 p.m. macro. Continuation model, beautiful, beautiful, beautiful. Let's continue forward. We're skipping ahead to Wednesday. Tuesday, as I mentioned, and as you guys probably know, was a bank holiday, so no trades for me, and nothing, even upon review, really to to review and to mention value-wise, which was to be anticipated. Bank holidays are typically slower. Okay. But Wednesday, November 12th, 2025, we're in the London 4:50 to 5:10 a.m. Eastern Time macro window. And here we're looking at a macro power of 3 short. Okay, now let's build this narrative with the tools that we use time and time again. My number one priority is my draw on liquidity. Okay, whether it's for an intraday session or just a fractal of price where I'm trying to take a trade. Okay, this low is falling short of what? Another session low, just above London low. So again, it's super simple. You want to look for these stacked liquidity pools. A low here, just above a session low. You see price, expanding higher. And what are we doing right before the macro window? Now, this is important for your notes. We're running a significant liquidity pool, a previous daily high. Okay, so if you see right before or right upon a macro window, us run a daily high, and then we can look back at the other side of the range and clearly identify a clear draw on liquidity, it's pretty likely if we see the setup that we're going to reverse and go attack that liquidity. Okay, so again, we see that sweep right before the macro, we enter the macro window, then we see another additional sweep of this high here, then we see our setup. So BISI with this SIBI overlapping, very nice balanced price range. We see the price come up into that. Look at the bodies, respect that there. Boom, 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 boom. Then finally we displace lower, and ultimately we do deliver down to our engineered sell side and London low. Okay, let's move forward. Still on Wednesday, but now we're in the 950 macro. Now this was a bit of a, I don't want to say trickier setup, but just with the expectation that I mentioned I wanted to be on stream this week with this, a bit more conservative with this, because we still had some overarching objectives below this. And whenever we have a significant inefficiency in line with equilibrium of the intraday range, so if you were to go into the charts here, which I mentioned you should, take the high of the range to the low, this new day opening gap is right around equilibrium of that. So you can still take these setups, okay, if it's super clean like it is, and we'll walk through it. But make sure you're paying yourself the majority of it off when you see this significant inefficiency right around premium. Okay, but to build this narrative, we come lower, we run Asia low, we're running PM session low as well. So previous session lows, this is from the previous day PM session low. And where are we going? We're going into a previous new day opening gap. Okay, so this is why these new day opening gaps are important, because as you see here, you can use them for multiple ways, for multiple reasons, right? If I see manipulation clearly running session lows into a new day opening gap, and then I see my model, my macro power of 3 setup deliver out of that new day opening gap, that's what I call a macro reference point. The new day opening gap is what price is referring to during this macro window. So this is time and price. Okay, now additionally, what do we see? We're right below macro open, and you see an SMT, a strong price signature on this overarching framework that we're laying out. Okay, you have this inversion right here, close above. We do see 2 wicks beyond that, but look at the bodies there, and ultimately we deliver up to the new day opening gap. Now, before I go further, again, I want you guys to also drag out the previous day's 130 fair value gap, and you'll see how it's overlapping with this structure too, just to reinforce the fact that this is a very good place to take partials, and we actually reversed not shortly after this back down to sell side. Okay, but really good example of how we can use the new day opening gap as a reference point to frame a trade-off of for a reversal, as well as an objective, a draw on liquidity. Okay, so forward, we're skipping ahead to Friday. There was nothing really from Thursday I wanted to mention. Okay, Friday, November 14th, we're in London kill zone, the 2:50 to 3:10 a.m. macro window. And this is textbook for continuation, again, with the protected high, protected low logic, as many of you guys probably saw in that video. If you did not, check it out. This high here, we're seeing, of course, clear downtrend, clear sell side delivery, and then we see what? An SMT at the top of this dealing range. So that builds the argument for this dealing range high being protected. So if that's a protected high and we see a retracement to a premium, more specifically the midnight fair value gap, during a macro window above macro opening price, this is a completely logical turning point if we see the inception of a short macro power of 3 setup presented to us. So again, 2 consecutive BISIs with a nice SIBI passing through after we deliver and respect that midnight fair value gap super cleanly. Ultimately, body respected, boom, 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 again and again, delivery down to the sell side liquidity pool. This is a great setup. This is just great logic overall with what's occurring here. And if you can understand the logic in all these setups, you're in a really good place, okay? Let's continue forward. And this, as I mentioned at the start of today's video, is setup of the week. This is absolutely textbook. And what's funny enough, if you're to put this Monday, it was the 1:50 p.m. macro. If you put that setup and this setup right here side by side, they virtually look identical. And that's how you want your trades to look, super, super similar, because you want to execute on the same model, the same system over and over and over again. So let's break this down. We had this dealing range high here from Friday. We had a super bullish trend. And ultimately, I mentioned on stream that the new week opening gap was our draw on liquidity for Friday's session. So this high is still short of what? That major objective for Friday's trading. Okay, we see this retracement, this dealing range low, this dealing range high, coming down to a discount. Run this low, so we're seeing the checklist met. So SIBI, okay, SMT, look at where that's occurring. Right around equilibrium of this pre-macro dealing range. SMT, close above, high probability inversion, delivery to the high of the dealing range, and ultimately the new week opening gap. And we had a session high stacked in this new week opening gap. And that's an additional confluence. Whenever you see session highs or session lows in other key areas like a new week opening gap or a new day opening gap, it's a very strong draw on liquidity. If order flow showing you it's bullish and wants to go there in that case. Okay. Now, one more thing I wanted to mention with this dealing range low, why is this protected? We don't have a sweeper in SMT. When we're delivering super cleanly out of a fair value gap like this, and I spoke in this in yesterday's YouTube video as well, this is likely to be a protected low, especially on the days when we're super, super bullish and we're seeing super clean expansion. Okay, but this is textbook. Again, you want to go into your own charts and not only look at this setup, but all of these. Okay, you're combining basic concepts with ICT like dealing ranges, liquidity pool, discount premium, macros, and inversions. I mean, it's textbook, it's repeatable. Really, really look into the charts here, guys. Okay, now, if you guys are looking at this and saying, well, why wouldn't you take this inversion? You need to study this. And also, maybe someone in the comments, let me know why this inversion was a bad setup. I spoke about it in yesterday's YouTube video and on the live as well, but there's 2 or 3 reasons why this is a poor macro power of 3 long setup. Okay, and there's only one, I guess there's 2 reasons on the chart. There's one that's not on here. Okay, so really do some digging and let me know what you guys think about that. But I hope you guys enjoyed this video. Please leave a like, comment, and subscribe if you are new. If you guys want to get my free macro power of 3 entry checklist with literally the exact things I'm looking for a trade and multiple examples as well, that will be in the description of this video, as well as all other ways you can connect with me. As always, I hope you guys enjoyed this video, and I will talk with everybody soon.